Hi, I'm Jim Minter, Director of the Purdue Center for Commercial Agriculture. Thanks for joining us to discuss the results from the October 2018 survey for the Ag Economy Barometer. Each month we survey 400 producers across the nation to learn about their perspective with respect to what's taking place in the ag economy. This month's survey revealed a nice rebound in the Ag Economy Barometer. The index moved up 22 points from 114 a month ago to 136 this month. And of course, that follows a large drop in the barometer just 1 month earlier. If you look at what drove the change in the barometer, and looking at the index of current conditions and the index of future expectations, both of them increased this month. But from a longer term perspective, probably the bigger change is what's been taking place with respect to future expectations. If you look at the Future Expectations Index, a reading of 146, that was a 24-point increase compared to a month earlier. That takes that index back to the levels we saw last spring before the trade disruptions occurred. The Current Conditions Index has rebounded relative to a month ago, but still remains well below the levels that we saw last spring. Each month we ask producers whether or not they view their farm operation today as being better off, worse off, or about the same compared to a year ago. And we saw a change this month. The percentage of people telling us that their operation was in worse condition than a year ago dropped from 54% a month earlier to 46% this month, with a very small change in the percentage of people saying it was actually better. When we asked them about the general ag economy and their perspective on that, the ag economy, we saw a significant change there as well. The percentage of people telling us that they felt like we were looking at bad times the next 12 months dropped from 69% to 56%, while the percentage expecting good times increased from 23% to 36%. So a significant shift with respect to their perspective about the general ag economy going forward over the next 12 months. Each month we also ask about their perspective with respect to making large investments in their farming operation. We saw a shift there as well. The percentage of producers telling us it was a bad time to make those kind of investments right now declined from 78% to 72% on the October survey, and the percentage saying it was a good time rose from 20% to 24%. When we take those good times and bad times responses and combine them into a single index value, we see a nice rebound compared to a month ago. A month ago, that reading was at 42, which was the lowest we've seen since we started collecting data, and that rebounded to 52. But as you look at that value, that's still well below where we were in late 2017 and early 2018, when those values were up above 70 for a while. So not near as much optimism about making large farm investments as what we saw roughly this time last year, and especially late in the year in early 2018. We also ask each month about farmland price expectations, 12 months ahead, and then periodically we ask about 5 years ahead. And we saw a shift there as well. If you look at the percentage of producers expecting lower farmland prices 12 months ahead, that fell from 32% a month ago to 17%. The percentage expecting higher values dropped as well. It dropped from 16% to 12%. And what that really means is the big shift was people moving away from forecasting lower values to no change in values. And that's the big shift in that particular chart. And we saw something a little bit like that with respect to the 5-year expectations. The percentage of producers expecting higher farmland values dropped from 46% to 21% 5 years out. And the percentage expecting lower farmland values actually increased 19 to 23%. So again, the big shift there was people shifting into the no change category. And that's actually kind of significant because from a long-term perspective, it's unusual to see a 5-year period when farmland values don't increase, and yet we saw a decline in people expecting those higher values from 46 to 21% on this particular survey. To learn more about what was driving people's optimism, we asked some questions to gauge their perspective on the U.S Mexico-Canada Trade Agreement, which was announced in early October. We asked whether or not that was going to relieve their concerns about farm income in the next 12 months. And we did get a positive response there. 62% of the respondents said that either somewhat or completely relieved their concerns about farm income going forward, while 25% said it didn't relieve their concerns at all. But that fact that it was over 60% probably does explain some of the improvement in optimism that we saw on the overall barometer index. Given the big decline that we've seen in soybean prices this summer and early fall, we wanted to learn more about people's plans and expectations with respect to soybean prices and soybean plantings for next year. So we asked what their expectations were for soybean prices 12 months out. Roughly half of the respondents in the survey said they expected those prices to not change or essentially be about the same. But notice that 39% said they expected higher prices, and that was a little over 3 times the number that said they expected lower prices, as that value was just at 12%. So some optimism about the future direction in soybean prices detected on the survey. We also asked people that planted soybeans in 2018 what their plans are with respect to planting soybeans in 2019. A little over 3/4 of the respondents said that they plan to keep their soybean acreage constant in 2019 compared to 2018. But notice that roughly 1 out of 5 producers that planted soybeans in 2018 said they were going to reduce their soybean acreage in 2019, and only 5% said they actually planned an increase. We followed that up. For the people that said that they plan to reduce their soybean acreage, we asked them by how much did they plan to reduce their acreage. And 2/3 of them said that they planned an acreage reduction in 2019 of more than 10% compared to their 2018 plantings. A little more than 1 out of 4 producers said that they plan to reduce their plantings by 5 to 10% in 2019. So we're expecting to see a shift in soybean acreage based on this survey. It'll be interesting to see how that plays out over the course of the winter and into the spring with respect to plans. From our perspective, we think probably the part of the country where we might see the biggest acreage shift would be in the western Corn Belt, but we'll see how that shakes out going forward. That wraps our results for this month's Ag Economy Barometer survey. The next barometer will be released on December 4th, 2018. You can get more information about the barometer and the actual detailed report at our website, purdue.edu/agbarometer. And we'd also invite you to join us for our next Ag Outlook webinar, which will be held on December 19th, 2018. And that's available on the Purdue Center for Commercial Ag website. Thanks for joining us. I'm Jim Mintert on behalf of the Purdue Center for Commercial Agriculture.